Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.
Good morning. It's Thursday, February 5th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So looking at some of those overnight headlines, the impact on the markets, the risk events, and the rundown on the precious metals. So you got sentiment shifting across many different asset classes with tech and cryptocurrencies declining and a loss of the momentum trade. You got precious metal miners. They are under pressure as spot silver fell about 17% overnight before finding some support. You got gold slipping to 48.05 before trimming some of those losses. Now, many people asking me about some of these events that are occurring, and it's really globally we're seeing a lot of different things impacting the precious metals. Some of the stories on the terminal here, you've got the MCX exchange. It's the multi-commodity exchange of India. We saw silver and gold ETFs fall about 21% on Thursday as gold and silver futures, they did open up sharply lower here on the MCX, snapping that two-day winning streak. The MCX also imposed additional margins on gold and silver after a periodic risk review with an extra margin of 4.5% on silver futures, 1% on gold futures, taking into effect as of last night's trading. Now in China, a trader who made $3 billion on bullish bets here in the gold market has now built a massive net short position. So that's over in China. So you got a number of different things. Remember, it's never just one thing, it's everything in these commodity markets. Now you look at April gold, the lows overnight, 48.05, and the highs overnight, 50.45. So we've seen quite a bit of a range here with futures down about $59, sitting at 48.90 as of this recording. The 10-day average true range sitting at $263.80. So quite a wild ride here as far as some volatility, but the volatility index of the gold market continues to decline overnight at 39.93. So futures may be looking at building some kind of consolidation here before deciding on the next direction. You look at March silver, the lows overnight, big washout, and it was really part of those two stories that I read just above here where you saw futures decline to about 73.41.5 and the high at 89.83. So quite a wild range again. The contract highs again on January 29th sitting at 121.78. We want to keep an eye on that 100 level here because the realm of possibilities on silver, given the volatility, sitting at 95 and consolidating at a 10-day average range at $12.75. You could have a possible range all the way down to 70.32 and as high as 105.54. They're not in the realm of outside possibilities here on just a daily basis here because of those elevated readings here and the possibility of futures just moving in one dramatic direction or the other on a lot of these different headlines. Remember, you are seeing a sell-off in the tech sector. You're also seeing a sell-off in the cryptocurrencies, and you tend to get this contagion factor that occurs in many of these other markets. A lot of traders will reduce their winning trades here and hold their losing trades and even add to those losing trades. And that's where you see some of these other outside markets perhaps being long. Something like crypto in conjunction with the silver market could be generating margin calls on that crypto front. We saw natural gas futures on Monday have a historic sell-off of about 27%. You have a lot of different elements here where some of these portfolios may be under some stress, and that's where liquidation occurs in some of the metals markets. Because if you look at the ETF flows, well, the ETFs, they sold about 259,000 troy ounces of gold in their holdings. It was the most in 3 months. So we saw the exchange traded funds here. They're having the biggest one-day decrease since about October 27, 2025, and the third straight day of declines in that gold ETFs and the longest losing streak since November 18th. The total gold held by ETFs has been rising here about 1.1% this year. So we're still holding in positive territory, but we're seeing some liquidation occur. You look at silver, you've got year-to-date total ETFs declining 1.6%. Hasn't gotten positive yet this year, even after that big boost we saw yesterday. And the ETFs cut about 560,000 troy ounces of silver. Now the gold-silver ratio is something to keep an eye on. Interesting but not actionable. But you can see that gold futures down about $60, while silver futures down about $6.50. So the gold-silver ratio continues to move higher at 62 to 1. And just about a week and a half ago, we were at 47 to 1. You look at some of these other outside markets. Remember, it's important to keep an eye on everything. You're going to continue to see some earnings come out with Amazon later today. And out of the 254 S&P 500 companies that have reported so far in this earnings season, 79% have managed to beat analyst forecasts, 17% have missed. Keep an eye on some of the micro caps, the small caps, the Russell 2000, the equal weighted S&P, all performing quite nicely here, while some of these more concentrated and tech heavy sectors here, as far as the S&P, the Russell, or I'm sorry, the NASDAQ, and some of these other ETFs that really have those Mag 7 names under quite a bit of pressure, as we're seeing some cannibalization take place, especially in that services sector and the tech industry. Now we are going to have the Challenger job cuts come out today, followed by the JOLTS job data, and Fed Bostic is scheduled to speak later on. You look at that CME Fed Watch tool, markets are anticipating a 12% likelihood that the Fed will cut rates by 25 basis points, and it really came after that ADP reading, and you go out to June, it's about a 68% chance. We are seeing the British pound slide here. They are having an interest rate decision, as well as the ECB. So the dollar index getting a boost at 97.74 could be putting some additional pressure on some of these outside commodity markets. The dollar index 97.67, the euro at 118.14. WTI crude oil continues to remain elevated at 64.60 on that March contract, and we're seeing gasoline futures get a bit of a rise. We are having a drawdown on some of the inventories. We're seeing that total inventories on crude oil are much lower than the 5-year average, and we're seeing some of this weather-related situation is really drawing down some of the inventories as well, especially heating oil and things like that. You had a big washout in the natural gas contract and a small bounce from here. The VIX futures, yesterday I told you in the video, keep an eye on that 20 level, because it is possible that we get it back above it. And today, we could also see the same situation here because of the fact you look at tactical resistance 1, which I sent out to the clients, sitting at 2031 with VIX futures at 1940. Yesterday, at one point, the VIX jumped on the futures contract over 20, and that's when we saw quite a bit of activity take place. You'll see that the movement in the S&P 500, it's like it drops the hammer and it goes into fourth gear when we see that VIX jump over that 20 level, and it's the possibility we get to see that today. Now looking at micro Bitcoin here for the February contract, dropping down here, $70,040 was the low on the session, down about 4% here. And we're continuing to see this slide across the board, everything from XRP to Ethereum to Ripple to Solana. They're all under quite a bit of pressure. You look at Europe and Asia, well, the European stocks fell. They're waiting that key interest rate decision. And Asian stocks falling for a second straight session, with the MSCI Asia Pacific Index falling as much as 1.6%. Remember, next week we'll have that 100-ounce contract on the silver market, and I anticipate a lot of people getting back involved with the futures contract in a small way here because of the fact that they can position size a bit better. If you're seeing $12 moves on a day-to-day basis with a 1,000-ounce contract, that's going to be 12 grand. You go to the 5,000-ounce contract, people are seeing about a $60,000 swing on that larger contract. It makes sense to incorporate some of these 100-ounce bars, and then also some of the dealers that are taking in silver. Remember, about a week and a half ago, I offloaded a couple 100 ounces. That particular dealer there that I sold it to could come in and hedge that particular or those two bars here until they sell them off, and then lift that hedge here, essentially buying silver on the physical side below that spot level. That's their haircut that they're entitled to, and then selling it at that premium that they're entitled to, and capturing that spread between the two. So the 100-ounce contract will do a bit better work here on some of the hedging for some of the smaller scale stuff. If you guys got any questions, you'll love to get a futures trading account with us, send an email to info@bluelinefutures.com. And remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.
Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.